By now, many of you may think that I have an obsession with the VIX or the fear gauge. Well, maybe or maybe not. The reason I focus on the VIX in times like this is that I find the VIX to be a very good contrarian indicator. And with few truly good contrarian indicators, I stress the VIX, maybe a bit too much. But the idea is to make money, and the VIX is a great way to stay out of trouble. And the problem is that many investors don't understand that even more important than making money is not losing money. Because if you lose your money, then you have no money to make money. It's simple as that. Again, the VIX provides a measure of the expected volatility of the S&P 500 over the next 30 days. But today, we're going to talk about the VVIX or the VIX of the VIX. And simply put, the VVIX is the volatility index for the VIX. And more technically, the VVIX provides a measure of the expected dispersion of the VIX over the next 30 days. So let's take a look. Most investors pay little attention to the VVIX. However, the gauge is quite useful if you take the time to study its behavior. Some call the VVIX the panic gauge since it tends to spike to its highs as the VIX moves higher. Generally, the VIX and the VVIX move in the same direction, but when the VVIX diverges from the VIX, it can provide useful information about the market conditions. This chart here and much of the discussion comes from Jay Wolberg of Trading Volatility. And Jay has provided these examples of what to look for using these weekly charts. They show the S&P 500, which is the top graph, the VIX is the middle graph, and the VVIX is the bottom graph over a 30-month period ending in late 2019. But this information is particularly important as we're smack in the middle of a VIX instability. So first, note how the VIX and the VVIX are generally moving in the opposite direction of the S&P 500. And this by no means is a law. It's simply the general trend. So looking at the top S&P 500 chart, the highs have been circled in blue, and these highs line up with the corresponding VIX and VVIX low values by the yellow vertical lines. So note that at most of these times when the S&P was at or near all-time highs, the VIX and the VVIX were near their recent lows. Now, there are many nuances around the VVIX which requires more inspection, but to me, it's another great contrarian tool. So, study it and learn it. It will help you from losing money. So, let's now go take a quick look at the current VIX and VVIX. This chart here is the 6-month daily on the VIX, the VIX. And what we're looking at here is starting with this middle portion, the actual price chart. You can see that we've hit lower lows here, here, and here. Now, this trend along here, along the top side, hasn't been breached by the VIX. So volatility has been generally declining. But right in here, you can see this is where we are now. I'm thinking that the VIX is trying to set a base. You go down here to the MAC, and you can see that the MAC is also setting a base here with the fast line actually moving over the slow line. Now, it's getting near that zero line, which may indicate some volatility. Now you look up here at the RSI as well. The RSI is trundling along the bottom here, but this last move here is slightly higher than this downward move at this point. So it may or may not turn out to be anything, but it's something you really want to pay attention to. Now, this is slightly divergent from the VVIX, so let's go take a look at that chart. And we're now taking a look at the 6-month daily chart on the VVIX. And of course, the symbol is simply VVIX. and the symbol for the VIX is simply VIX. So the divergence I'm talking about is, if you can remember the last chart we just took a look at, the VVIX seems to be setting a better base here. This low here is pretty consistent with that low there. And then this move up here certainly breached that trend. So the trend of a declining VIX may be over pretty soon, at least indicated by the VVIX. And so we had a bit of a eruption in the VVIX here. We're coming down to this point here. We're settling in at maybe 125 or thereabout. And that is definitely higher than normal. As well, the VIX is higher than normal. Now going down here to the MAC, you can see that this base in the VVIX is definitely setting up here and moving higher. Both the fast line and the slow line are moving toward that zero line. And if they cross through that zero line, then that does mean volatility. And you can see here on the RSI that the base is also setting up very well here, with this move at this point here higher, much higher than the previous lows down here and here. So this isn't going to say that the stock market is going to take another crash. All it's saying is be cautious, because there may be some volatility coming very soon. So once again, just be patient, be cautious, and don't lose any money. And for today, that's ChewDog Charts. Thank you.